More signs of sticky inflation and a slowing economy. I'm Lisa Bernhard with Reuters, and joining me is Shana Orsic-Sissel. She is CEO of Banríon Capital Management. Shana, today we saw February producer price index come in hotter than expected, and retail sales rebounded for February, but still disappointed a little bit. What does this say about when the Federal Reserve might start cutting rates?
Well, it certainly doesn't make it more sooner. Having hotter than expected PPI and CPI reports this week means that the likelihood that the Fed is going to surprise anyone and cut before June is highly unlikely. I am now beginning to think it's unlikely that they will cut in June either, as long as inflation stays sticky high. And in the case of PPI, it was energy prices that pushed up that number. I just don't know how exactly the Fed is going to be able to justify cutting rates anytime soon. But there's also political pressure here because this is a presidential election year. So I guess the question you should ask is, should they cut and will they cut? Because they're not the same. I think political pressures will push the Fed to cut rates, but I don't think they should cut rates.
Explain to folks out there the dangers of the Fed cutting rates too soon.
Well, if you think about the whole point of cutting rates or raising rates, it's to control demand in the economy, right? So if you have strong demand, as we do, and you have robust job markets and companies are doing really well, and you cut rates too soon, you accelerate and potentially overheat the economy. And so that is really the question here. I don't think demand has stepped back enough to justify cutting rates at this time. And that is really the question here. The problem is if you over accelerate the economy because you cut rates too soon, the chances of having a bubble that bursts become much more likely.
Okay, let's turn to stocks. And speaking of potential bubbles, you're still really bullish on NVIDIA, despite its frothy valuation and the fact that the stock has been highly volatile in the past. Tell us why.
Well, first off, I don't agree that this is a frothy valuation for NVIDIA. In the mid 30s is kind of where it's at, forward earnings. And that's actually kind of on the low end of its historical range. It's always traded at a premium. And the valuation of a stock is really just as good as the E in the PE estimate that you have there. And NVIDIA has shown time and time again that it is absolutely blown out of the water, the estimates of its E. So I think that the stock has a lot of room to grow. It has a lot of tailwinds, especially as it relates to data center and AI. And I think we're really early on in that trend. So I think there's a lot that can go right for NVIDIA, and they really don't have competition at this point. So for those reasons, I think the stock can still go higher.
I know you also like alternative investments, and Bitcoin is an alternative investment. It's been on a tear, although it's down a little bit today.
Yes.
Can you explain to us, not to get too nerdy and wonky here, but can you explain to us what Bitcoin halving is, which is supposed to happen in April, and how that perhaps may have been a catalyst to driving up the price recently?
Well, I don't think that is the catalyst that's been driving up the price recently. I think the approval of the spot Bitcoin ETFs is the key catalyst there. But halving will only drive the price higher. And so what halving is trying to simplify this the best I can. When there are Bitcoin miners, i.e., the people who solve these complex algorithms and get a prize, if you will, for doing so, they get Bitcoin. And there's like a little pool of Bitcoin that they use to add for these miners. And every 4 years, the amount of the reward gets cut in half. So that means less Bitcoin going into the supply. And so every time less Bitcoin goes into the supply, right, that makes the price go up. Just generally speaking, you are now having less of a reward for the work that you do, which means there's less Bitcoin being made available to the general public in any way to trade. So that's going to cause the price to go up. And Bitcoin really only has, if you think about all the Bitcoin that's out there, the entire market cap, only about less than 20% of it actually trades. So now it's going to shrink even more. And that means that all this demand we have from these spot ETFs is only going to cause the price to go higher because there's less outstanding Bitcoin to trade.
Today that Steve Mnuchin said he's putting together a consortium to try to buy TikTok. Now, we know him as Trump's former Treasury Secretary. He's also a business guy. You probably know a good bit about him as a businessman. Tell us about his past as a businessman and whether or not you think that he will follow through with this.
Well, he definitely falls into my space of alts. Former Goldman Sachs, former hedge fund, former private equity, just purchased New York Community Bank Corp. So, he's all about making a big splash. He has political ties, and this is very much a political sale, if you will, if ByteDance does decide to sell TikTok. And so I think that it is a natural marriage. It makes sense. Whether or not it'll happen, I'm not sure. There's been a lot of rumors over the years of who's going to be the next buyer of ByteDance and TikTok as a brand here in the US, and none of them have come to fruition.